Already, we've had a number of high-profile deals. AT&T spinning off Warner Brothers, Kellogg's, GE, Johnson & Johnson, all planning or splitting up their businesses as well. So is this the new trend for 2023? Let's ask Emilie Feldman, professor of management at the Wharton School of Business and author of the book Divestitures, Creating Value Through Strategy, Structure, and Implementation. I know it's my bedtime reading. She joins us here alongside Bob Bassani, and it is really great to have you guys both along with us. So, Emilie, you're always kind of trying to make the case for value here, but why do you think that 2023 is going to be an especially perfect year for this kind of activity?
Hi, Kelly. Thanks. Yeah, I think it's a couple of factors that are coming together. So first, obviously, the macroeconomic environment is quite challenging right now with interest rates on the rise and stock market volatile and heading downward at various points. So, really sort of seeing that a lot of times what this does is that it makes the priority on focus that divestitures can help achieve really important. So by divesting certain businesses, companies are able to focus in on key resources and key areas of business that are central to their strategy. So really helping them to align around those priorities as opposed to having a more diffuse portfolio.
Yeah.
The second reason is also that we can really see divestitures helping to generate liquidity in certain cases, right? And that can be a much needed source of capital as well in tightening economic environments.
Bob, what do you say? I think also what Emilie's doing is kind of providing the framework for us to think about why we might be seeing a lot more of this.
Well, yeah, look, there's a simple problem in 2023. Companies need to raise cash under any normal circumstances. So how do you raise cash in a rising interest rate environment? It gets very tricky and it can get very expensive. So one simple solution would be divestitures. This might be especially a good solution when you've got really loud activist investors floating around, and there's a lot of them out there. Kohl's, Amazon's got people commenting. So that might make a lot of sense. I guess the question I'd have for the professor is, we don't study divestitures very much. I'd be very curious to what she found out in her studies.
True.
Do divestitures work? Do companies actually do better when they've been spun off into another company or out of the original company at all? Is there any evidence that it's helpful for the company?
Emilie?
Yeah, thanks for the question. So I definitely can speak to this, and I feel pretty strongly about it, having written the book that I just wrote. So, divestitures do create value, shareholder value for companies. In fact, on average, divestitures create 2 to 3 times the shareholder value of mergers and acquisitions, which is pretty striking when one considers that companies do typically 3 to 4 M&As for every one divestiture that they do. So it's almost this prioritization on exactly the wrong strategy in a sense, right? That we're seeing this focus on expansion as opposed to reduction. And so exactly like we've been saying here in this conversation, why are divestitures so valuable? Because they can help this realignment, this liquidity generation, all of these sorts of factors that are quite important. So I think it really begs the question of, can we reframe that conversation around how can we use these transactions proactively to help generate value for companies, especially in an environment where that's going to be important.
Bob, talk us through this from a stock point of view. We all know what to do with traditional M&A. Okay, the acquirer sells off a little bit, but hey, if you got the acquiree, you could get a 20% jump in your share price. When we're talking about a divestiture, it usually, I hate to say this, but it usually comes from a place of weakness. And there seems to often be questions about the performance of the spun out stocks, perhaps with the exception, if I think back, I think it was Ferrari, where that spin out has been incredibly successful.
Yes, but for all of those, you can point to others that have not been. What I noticed after I've been the stocks correspondent for 25 years, these things go in cycles. So what I've noticed is that there are cycles when mergers are a big thing. People want to go out, be acquirers, they want to expand their portfolio. And then there are the opposite, where people want to divest and spin off. I once interviewed a very famous media mogul 15, 18 years ago. He had made a very famous acquisition and then 4 or 5 years later had taken the same company and spun it off. And I said to him, he was on the floor, I said, well, gee, sir, what happened? And he looked at me and said, well, Bob, that was then, this is now. So I guess it's a long-winded way of saying, Professor, that these things do go through cycles, right? There are periods where divestitures are more common because of the economic conditions or because companies make decisions that the fit wasn't quite as well as they thought it was going to be.
Yeah, last word, Emilie?
Yeah, they certainly do. I agree with that. There's incredible cyclicality on these transactions. And the only other point that I would add here is that in spite of that cyclicality, we actually do end up seeing really strong outperformance of companies that are spun off, right? So the average number is something like 15% annualized returns after businesses are separated. So I think that this idea of, sort of really allowing individual businesses to thrive independently, even if the previous strategy that led them to combine in an acquisition might or might not have been flawed, can really be an important reason why these transactions are so important.
Yeah. Guys, thank you so much. We really appreciate it. It gives us a lot, I think, to understand about what might be coming down the pike. Emilie Feldman and Bob Pisani on spinoffs. We appreciate it.